Hey guys, it's Ed from PleasiaLab.com. In this video, we are going to be testing the RSI, which is a classic indicator. It's very popular. You see it everywhere. Is it any good? We're going to try and find out. So let's go over here. I prepared a script. Um, Let me just show you kind of what it looks like. So in case you're unfamiliar, although most people have seen it already, it's probably the first indicator you see when you start trading. So this is the RSI down here. This is just a random picture I found on Google Image. So when it becomes quote unquote overbought, you sell, and when it becomes oversold, you buy. So what it is it's an index, and it goes from 0 to 100, and once it is below 20, it's considered oversold, and once it's above 80, it's considered overbought. So you can see here, this is what people look for, and they look for a kind of divergence here against price, and trade in the opposite direction when it's overbought or oversold. So I prepared a script here for pound dollar 5 minute, and when it is less than 20 we buy, and when it is greater than 80 we sell. So that is pretty much how people use the indicator. Sometimes a little more complicated than that. Like I said, sometimes they look for divergence, but for now we're just going to do a simple back test and just see if there's any merit to the indicator showing you whether the market is overbought or oversold. So over here we're going to use a 50 pips stop loss, 50 pips take profit, and pound dollar like I said, and let's do 1 year. So 2020, start of 2020 to the end of 2020, and we'll run that. Okay, we're back. So this is the performance, and again, the top chart here is the short profits and the long profits. We can see here we got quite lucky on the shorts for whatever reason on the third month of 2020, but overall it was still poor performance, pretty much achieving nothing. But this spike is somewhat interesting. Let's scroll down here. Profit percentage minus 3.7. Win rate 49%. So pretty much 50-50. What we'll do just for fun here is we're going to decrease the stop loss. Let's do maybe 30 pips. Let's do 20 pips. 20 pips stop loss, 20 pips take profit. Since we are trading the 5-minute chart, it is a fairly tight time frame, so perhaps 20 pips is a little more appropriate. What else can we do here? We can maybe this signal, we can make it below 10 and above 90 to make it even more, I guess, overbought, even more oversold, and we'll see if that makes any bit of a difference. Alright, it looks here like there was almost no longs taken, so the market was almost never oversold to that extent in 2020. Let's take a look at the stats. $4,000 trades, 2,000 wins, 2,000 losses. Question is, how many short trades were taken? We actually don't have that breakdown here. Or I should say long trades. It looks like there was almost no long trades. Okay, so again, this is 4,000 trades that we back tested, and the reason there's so many, I believe last one we got about 800 because the stop loss and take profit were a lot bigger. Of course, if we increase the stop loss and take profit, it would be less trades again because it would take longer for them to complete and take another one. So there's nobody really that back tests this many trades on YouTube that I'm aware of. They might backtest 100 and they might actually get this spike right here, but they're not getting the full story, right? So they might say that a strategy is very, very good based off a spike like this that they might get within the third month of 2020. So for example, you know, from here to kind of the top of this spike is actually 1 month. So that could easily be 100 trades. It's a popular trend where people are testing just 100 trades, which really doesn't tell you the full story. It's not nearly enough. Anyway, since we did not get any long trades here, let's try do something else. Let's reduce this back to 80 and reduce this back to 20. Not sure why we got so few long trades here. Unless they all just happen to be breaking even, but I doubt that. Okay, a lot less long trades again. It looks like the market was oversold a lot more than, or it was overbought a lot more than it was oversold. But basically the same result. You can see that changing the stop loss and take profit size doesn't make too much of a difference. What really makes a difference is predicting the direction of movement, which this indicator doesn't seem to be successful at, except here in this particular spot. For whatever reason, it did seem to be successful. Again, part of the rules is we are only taking one long and one short at a time to mitigate risk. That's what you need to do in any good strategy. So, you know, we can't just keep buying or selling infinitely. So that's one of the rules, and that is why you see such balanced statistics here. So if we scroll back down again, the win rate is 49%, 49.4. So, you know, if you keep back testing over a couple of years, that might even out even closer to 50%. That's just how balanced the Forex market is. So I hope you enjoyed this video. If you want to see something else, let me know in the comments. I actually thought I'd check the chart after this back test and just see, and of course I completely forgot it was Brexit in 2020, so we had this ridiculous spike down, and that's why the results looked the way that they did. Now, I was actually short here right from the top, and it was a very good feeling. I got lucky. Anyway, this spike right here skewed every single indicator, every moving average, and of course probably the RSI as well. Everything was completely skewed. So no, I won't buy the trial. So yeah, after that it was mostly an uptrend here. So for all of 2020 here, it was mostly an uptrend. So it would make sense that the market was overbought more than it was oversold. And it would make sense here that shorts made a bunch of profit. So pretty interesting.